everyone. Dave Landry here. Welcome back to Trading Simplified. This is our 13th episode. Wow, time is flying. So, what are we talking about? Well, we're going to focus on 20 trading resolutions for 2020, and I hope to get through as many as possible. But there's a lot of things I want to discuss today. Plus, each and every one of these resolutions can be a show in and of themselves, and I have done many shows on just that, and you'll see once we get into that. But the reason that we're going to have to get through as many as possible, or might not get to all 10, is because there's some trades that I want to show. It's been a few weeks since we've done a show. So I want to show the miss, the best, and the worst trade of the week, going back over a couple of weeks. And then, of course, just a little housekeeping. FYI, I do take requests. If you go to davelandry.com/contact, which is the second link on the screen, you can submit some things that you'd like me to cover. We're always looking for information. Or questions, I should say. A lot easier to do a show when we know what you guys want. So just let us know, please do. And if you're interested in the slides and more information, an introduction course, etc., you can go to davelandry.com/StockCharts. If you're watching the show live, give me a couple hours to get the slides loaded up. All right, let's start off with the mystery chart for this week. And here's our mystery chart. You can see that it took off from low levels and then it went sideways for quite a while. There was no trade to do here. It's kind of wide, loose, and sideways, but it really didn't do anything wrong. But notice that it began to take off and then has since pulled back. And we'll follow up on this one in coming weeks. But it's a good looking setup. And we're going to go through quite a few setups here in a minute on what I like as far as good looking setups. And if we zoom in a little bit, this is what it looks like. You can see that it's beginning to accelerate higher. The other thing is it does have some nice persistency, meaning that the stock tends to go up day after day. And that's a very powerful concept. In fact, that's probably another one of those things that could be a show in and of itself. Now, let's take a look at the missed, the best, or the worst trade of the week. And this week, once again, I have all three. So here's the worst trade of the week. This is an opening gap reversal type of trade. This is a little bit more involved than I usually get into in these shows. It's not necessarily my bread and butter of trading. It's just something that I will occasionally do when an opportunity presents itself and the market has a big gap open or something. In a case like this, I was looking to play the VIX, and I bought on the intraday morning reversal, and I really didn't do anything wrong in the trade, except that I bought too many shares. When you're taking one of these little day trades like this, I highly recommend you risk at max 0.5%. I ended up with 600 shares per 100K, and I got stopped out on the trade for about a 1.6% loss on the account overall, I should say, accounts overall. So very painful type of trade there, not getting the position sizing right. I think that my thinking at the time was that this thing would initially move in my favor so I can get that stop up, and I was not expecting to get stopped out at a full loss. So that's the worst trade of the week. The best trade of the week happened actually this week. And by the way, and this is why I'm showing you this is a Facebook post that I put up. Any trade that I'm going to show you here, I want to point out that I have mentioned it, of course, before I'm long, because I'm not front running any of these setups, unlike some of these scumbags out there that do the kind of thing, but that's another story altogether. But I want to show you that I did put out a Facebook post that I was thinking about this stock. And if you go a little further down, you see where I put out that it is a go. Now, I will be doing shows on IPOs. I did one previously for StockCharts.com, and I will be following up on that show and do some additional ones. So let me just show you the pattern real quick. This is a 5-day simple moving average, and I'm looking for Landry light, which is just the low is greater than the moving average. And I'm also looking for a new closing high. It doesn't have to be an all-time high unless day one sets the high for the first week. So you can see it's a new closing high. But notice on day one, that set the new high for the closing week, or the week, I should say, first week of trading. And it must also close above that high, which it did on Monday. And then when that occurs, we buy market on close. Now, you're going to notice that you're probably thinking, Dave, I thought you were a pullback player. Well, in general, I am, but in IPOs, there is a breakout characteristic. And just buying those brand new closing highs with a few caveats can pay off pretty nicely. And this is a pattern that I really like to trade. Now, if you have a good eye, you'll notice that, well, wait a minute, Dave, new closing high. You also had Landry light the day before. And the reason it wasn't a setup then was because it was less than the day one high. So if that day one high was lower and then some other high during the first week was higher, then I wouldn't worry about the day one high. There's a lot of reasons I'm concerned about that day one high. Not enough time to get into all of them, but a lot of times you'll get the initial euphoria and you want to make sure the stock can get past at least that first day's high. And again, here's the actual trades that I did in one account. And this account is close. I think it's about 130,000 or so. So right around 100,000 or so. And notice that I ended up with, if you add all that up, it comes out to 1,000 shares. And this is what happened on the next day. So it was a buy, market on close. A little hard to take these trades sometimes because it's a bit of a leap of faith. You're going into a market on the close. You don't know what's going to happen. You have to wait a whole day to see what happens. And it's a little hard to do sometimes. But once you get used to them, you'll really like these setups. And then the following day, of course, it doesn't always work this well. But in this case, it did. We had a nice little rally, and I was able to take partial profits on that. All right, let's talk about the missed trade of the week. If you go to davelandry.com/archives, you can get the archives to all of these setups that I mentioned through my trading service. And then obviously, if you remember the Facebook group, you can get those trades there. But that's the long link, and that short link where all the archives are located is at davelandry.com/archives. And if you look at the video for that day, you'll see I had that BNTX as an honorable mention, but then I had the word thin by it. So it was a little too thin for me to go after, but I absolutely love the pattern. You can see you've got a nice accelerating trend higher. You got a persistent trend higher, followed by a trend knockout. And then again, those were the parameters real quick. Now, keep in mind, if you want my slides, you could just request them through the link, which I'll show again at the end of the presentation. But it's davelandry.com/StockCharts. So some of this I'm going through quickly. You can take your time and go through the slides when available. So anyway, the buy was here, and then it did trigger an entry, stop down here, and then the initial profit target, which was hit. Now, trading like life is making decisions and living with them, and you just have to live with your decision. I decided not to take it because it was a little bit on the thin side. And obviously, I wish I had the profits in my account, but you just have to stick with your guns, and you can't put yourself into a state of regret, as I'll show you here in 1 second when we get into the New Year's resolutions. All right, speaking of New Year's resolutions, here are my 20 trading resolutions for 2020. And again, let's see how many we can get through, and then I'll flesh them out in more detail over the coming weeks. Number one, I will only take trades when conditions are conducive to my methodology. So as a trend follower, you should be able to draw a big blue arrow on the indices, as you can do now, of course. Now, there are some caveats to that rule. So unless I think I have the mother of all setups. If you have the mother of all setups and the sector's not looking fantastic and the overall market's not looking fantastic, if you really think the setup has potential, a tremendous amount of potential, and as I often say, borrowing a line from market wizards, if it's intuition and not into wishing, in other words, you're just trying to make something happen, then by all means, take the setup. Make that decision, but then be willing to live with that decision. Now, the other thing, and the other time, and I'll show you one here in just 1 second, is if you have a decent looking setup or a decent looking stock that can trade in lieu of conditions. So as you'll see in 1 second, we traded a gold stock, even though the overall market was kind of questionable, because gold stocks and commodity stocks can trade in lieu of the overall market. They can go up and the market goes down, and unfortunately vice versa too. Now, the other case would be if you have a possible transitional setup. If you go back a few weeks, I think it was maybe my second or third show where I talked about trend transitions. A lot of times these early trend, these emerging trend patterns will show up before you had that longer term confirmation in the overall market and in the individual setup. So sometimes you have these setups that kind of lead the market, and that's a little bit more advanced, but those are those emerging trend type of patterns. So I went back over the summer where I knew I had a long time where I didn't recommend any stocks. And just in August, I noticed that there were about 2 weeks of trading where I didn't recommend any stocks whatsoever. And the people on my servers were probably thinking, why am I paying this guy to tell me to do nothing? Well, let me tell you something. I think it was Tim Ferriss once said, scratch your own itch. And so what I'm doing with this trading service is I'm scratching my own itch. That sounds kind of weird, but basically what I'm doing is I'm putting something out there that I will follow myself. And if there's nothing to be done, then I'm not going to do anything. And I'm certainly not going to tell you to do anything. Now, one thing I've learned fairly quickly when I first got into this educational business, which happened to be by accident, that's kind of a long story, but long story aside, what happened was there were salesmen, and I was part of one of the first websites out there. It was us, and I think who was the other one? Market Watch, and I think it was pretty much it, and maybe CNBC at the time. Anyway, what happened was we had some salesmen who were selling my trading service, and it was in the middle of summer, and I stopped recommending stocks because there was nothing to do. Well, the salesman called me panicky because they were losing clients like flies. And what's interesting is when I recommended some stocks and they didn't work, we really didn't lose clients. And that just showed me right there that a lot of people trade for action. So there's another lesson in and of itself. As you can see, every one of these resolutions can certainly be fleshed out a heck of a lot more. Anyway, back to this. After many, many days of no setups, actually a couple of weeks of no setups, most of August, I found a little gold stock, and I figured, well, even though the stock market looks a little iffy, gold, being a commodity, can trade higher in spite of a market headed lower. So I thought it was worth a shot. So number 2, I will carefully plan all trades ahead of time and then work to diligently follow that plan. Plan thy trade and trade thy plan. Easier said than done, but if you can do it, you've got it figured out. Now, in this trading service that I'm talking about, where all these stocks come from that we talk about, or I'd say most of them come from, what happens is I lay out a plan. Okay, this is where we're going to get in. This is where we're going to put a stop. This is where we're going to take initial profits. And I update that on a day-by-day basis. Now, there might occasionally be a little bit of discretion, which is a little bit more advanced, but a little bit of discretion where you might take profits a little bit early. You might give a stock a penny or two wiggle room on a stop and a few other things like that. But for the most part, you want to really follow that plan. And at least initially going in, it's pretty much exact. You get in here, stop goes here, initial profit target is here. So what will happen is I'll put that plan out, and then the next day, I'll get an email. I didn't take XYZ. Is it still a buy now that it's up $2? Should I get in? What should I do? Should I let it go? ABC hit the stop yesterday. It's selling off even more today, kind of a panicky type of email. What should I do now? And then I didn't take partial profits on EFG. It's now selling off hard. What should I do now that an opportunity was missed? So I can go on, but I don't want to bore you. I guess it's too late, right? But there's plenty of mistakes that people make simply by not following the plan. As I often say, trading done properly can be quite boring. You're either waiting for a position to trigger, waiting for setups to begin with, or waiting once you're in to that position. Once we get the patience, I will flesh that out quite a bit. So the bottom line is you have to avoid putting yourself into a state of regret by following a well-thought plan. It's much more fun to wing it, but longer term, you're going to create a lot of angst for yourself by not having a plan in place. Okay, we're going to take a quick break, and then when we get back, we're going to continue these trading resolutions for 2020. Okay, and we're back. When we left off, we were talking about my trading resolutions for 2020. So now we're up to number 3. I only take trades that trigger an entry. Now, this is very important. Stanley Druckenmiller once said the way to build long term returns is through preservation of capital and home runs. And by waiting for an entry, you will, in many cases, avoid putting capital into harm's range. Let me rewind that. By waiting for an entry, you will avoid putting capital into harm's way on many occasions. In case you're wondering, I don't know what's wrong with my mouth today. I couldn't find any clipboard for Stanley Druckenmiller. It didn't cost $200 and maybe $200 per use. So I drew a little stick figure of him. But he has lots of money, so hopefully I did a good job on that. So anyway, getting back to waiting for entry. This is a dated example I found in some old slides, but I thought it was a fantastic one. Notice that we had an entry up around $21 or so in this particular stock, and it began to sell off. And I thought it'd be kind of interesting to back the chart out and see what happens after this no trigger situation. It's kind of interesting. The stock lost about 80-90% of its value over the next several months, but it never did trigger an entry. So once again, you avoid putting capital into harm's way by waiting for an entry. Number 4, I will pick the best and leave the rest. Now, I know it's a little cliche, but it's really important that you do that. If a stock looks like an electrocardiogram, you should toss it out as a trend trader. So let's take a look at what good-looking stocks look like, okay? So here's stocks that I've been talking about since the beginning of this show in late 2019. So in this particular case, we had a gap higher. First of all, we had a TKO. We had a nice trend higher. And once I see those two things working, it's like, well, let's study this trend. And notice that the trend began to accelerate with that gap. It's a persistent trend, and it's also accelerating higher in more recent times. It's just a good-looking setup. Persistency, very important. And eventually I'll do a show on a pattern I call persistent pullbacks, where you're just looking for persistency in the market, and then you're looking to get in on something like a TKO. In fact, a lot of the TKOs that I show are also persistent pullbacks. Here's another one, TKO. Looks pretty darn good. We look back at time, we see, okay, we've got a big old fat trend. And notice that it took a while to get going, but towards the last month or so before this thing triggered, or right after it set up, I should say, notice that it was accelerating higher. So it did get a slow start, but then it began to persist and accelerate higher. Here's another one. Notice a nice little TKO, sticks out like a sore thumb. You can go back in and watch, I think it was the 3rd or 4th episode, we talked about the TKO. And you can see once again, well, we got a very nice trend from lows. And it's not fantastic going back in time, but then notice what happens. Notice that it begins to accelerate higher, and then there's that persistency again. If you didn't look for, or I should say, if all you look for was one thing in the charts, I think persistency would be it. And it amazes me how useful and how great persistency works. So here's another one, TNK, little generic pullback there. We look back at time, we see nice little uptrend from lows, pretty much a double and change in price. Notice that the trend was accelerating higher before that pullback. Now, if we go way back in time, notice that it wasn't so great, but the personality did begin to change with this stock. It was also coming off a major low, which I think also helped it along. Kind of like the Phoenix type of strategy I often talk about. Here's another good-looking setup. And by the way, I'm a big fan of doing postmortems after the trade. And when I was going in and looking at these, and on every trade, what I mean by postmortem is go in and look at the trade before you pretend that you didn't take the position. Let me just rewind all that. So after the trade is done, pretend that you didn't take the position. Go back to day one when it was set up, and then ask yourself if you would have taken the same setup again. And when I was doing this little exercise here, putting together my charts to show you what I picked, I felt pretty good because these setups look really, really good. And it's not just in hindsight. But you can see that in this particular case, we had the TKO, which was also part of a pullback. We had a gap higher. So it's a good looking setup. The other thing too is it's an IPO. Now in IPOs, I'm a big fan of buying at or near new highs, like I showed earlier in that OCRT trade. So if an IPO makes the new highs, everybody is happy. There's no bad memories. People had owned it higher than where it is, obviously. So it's a great place to be. And you can see it's just off the highs. Now, like the other one, it wasn't great for a while, but looking from the setup backwards, it had a really nice breakout slash trend followed by that TKO pattern. So again, not great, but then it began to improve. And also, again, notice that persistent move higher. Here's another one, IPO. You can see it pull back, nice uptrend and persistency and acceleration, all those things I talked about earlier. If it gets to 31 and change or 31-ish, then it's at all-time highs and everybody again is happy. So that's another great looking setup. So when in doubt, take the chart out. And this is the exercise I've done before. You go in and draw your charts up. And when you finish drawing them up, if you take the chart out and your little stick drawings, if they look something like this, and then let's put the chart back in, notice that I intersected nearly every bar in drawing that, okay? So I didn't try to make it perfect. I just followed the trend of the chart. And if you have a setup that looks like that, a nice little pullback in this case sort of looks like what? A cup and handle. Then you have a good setup. Number 5, I will be patient. Now, this is why it's going to take me a while to get through these trading resolutions. And I have 20 of them, obviously, but the reason is because there were individual topics like being patient where I could spend an entire show. And I've actually spent several shows just talking about being patient. So be patient with me while I do this. The waiting is the hardest part. So Tom Petty got it right. Now, there's 3 forms of patience. The patience to wait for your pitch, the patience to wait for a setup to trigger, and then the patience to wait for a position to move. So let's break those down. Now, I'm not a huge sports fan, although I can be found occasionally sitting in the nosebleed for a Saints game, and I was there last Sunday crying, but that's another story. But from what I understand, doing a little research, a fat pitch looks like a cabbage ball to a pro baseball player. It's just a perfect pitch, and you have to swing at the fat pitch. And that's what they teach you, I guess, in batting school. Now, one thing I couldn't figure out after years and years of being in this educational business is why do these people who strive for perfection in life settle for such mediocrity in markets? And I would ask this nearly every webinar that I did and seminars too. And then one day, one of my clients, who's a psychiatrist, she emailed me a very well thought email and said, you know what, Dave, I think I can answer that question. And she said, I think I can answer the question about why highly trained and skilled professionals can't seem to get the chart reading / trading thing. I am a physician who specializes in psychiatry. Easy for me to say. Doctors, lawyers, and mechanics. I often say that if you're a doctor, lawyer, or automatic transmission mechanic, you might be too smart for trading. But those guys are trained to take whatever train wreck comes along and fix it. We are expected to do something immediately, regardless of the conditions and despite the possible negative outcome of our action. As a physician, if you dwell too much on the potential negative outcomes, you will become a deer in the headlights and will not be able to function. So we tend to minimize the negative aspects of situations. Waiting for the perfect pitch is not what we are trained to do. So you may have had 10, 20, or 30 years of bad training. This is something that I really want to flesh out as we get deeper and deeper into psychology. But the clincher is we have no training to prepare us for sitting on our hands and waiting. It is simply not part of the mindset. And that's Dr. J. Now, the second form of patience is the patience to wait for a trigger. So here was a setup that we talked about in the year-end show. And day one, no trigger. Day two, no trigger. Day three, no trigger. Day four, no trigger. So we waited an entire week, and then there was actually a holiday in there, so a week and a day for the stock to trigger. And finally, it triggers. And this is KOD. That turned out to be, I think, our biggest winner of 2019. RUHN was another one. Day after day after day after day after day, the stock didn't trigger. And I nearly missed this, truth be told, setup because I didn't bother putting in an order on that last day, the day it triggered, until one of my clients pointed out that it had just triggered. And I want to thank him for that. I probably should buy him lunch. So you have to wait for the trigger to actually occur. You have to wait for that entry. And then the next form of patience is the patience to wait for a position to move. Now, I talked about this stock quite a bit. This is AUI. We haven't quite got to that profit target yet, so I'm hoping that this becomes the mother of all dead money reports for me. Well, we had a nice little TKO. It triggered and looked like it was initially off to the races. I felt pretty excited about this position, but then nothing happened, at least not yet, although we are nicely profitable, so that's certainly a good thing, but it seems to be taking forever. It was that 1, 2, 3, 4. Here we are nearly 5 months later, and we haven't hit that profit target yet. But here's the deal. When you're going into a trade, you want to look for perfection, all the things that I preach week in and week out here, as I just preached a few minutes ago: acceleration, persistency, nice little obvious setup like a big fat bar, TKO, things like that. So you look for that perfection, and then once you trigger in, you simply need, I know, easier said than done, but let the chips fall where they may. Now, here's a bit of a mic drop moment. A few months back, actually more than a few months back, I posted this in my Facebook group. So I woke up with an epiphany. Trading is so effing easy when I wait for the best setups, take them, and then follow my trading plan. I think I might write that down. So I had waited weeks for setups, and then finally a few things presented themselves, and I did incredibly well. I sat on my hands for a long time, and then finally I started getting some setups, and then I was able to profit from them. So the bottom line is you want to be patient and wait for those setups. Number 6, I will do my homework, leaving no stone unturned. Now, for me, that means looking at a couple thousand charts daily. It also means in those charts, looking at sectors, the dollar, gold, and other relevant commodities. Easy for me to say. Some loose parameter scans, which produce quite a few stocks, indices, ETFs, and IPOs. Okay, we're out of time, but I think I got to a little bit more than I wanted to, than I thought I would, I should say, this week. So we'll pick up on these next week. If you need to reach me, davelandry.com/contact. And I want to thank everybody for watching. And then here's the other links too, if you're looking for the slides. Thank you very much.